So welcome this morning to the tax training for all the Partner Co. brand partners. And we got to give a disclaimer that this is information only. My dad was a CPA for 40 years. So I've grown up in a CPA household. We've got a lot of people that are going to be chiming in this morning that have been getting 1099s in this network marketing industry for many years and are working with their CPAs and all the different things. But the tax code is written, if you don't know this already, the tax code is written for business owners. It's the employees that have zero tax advantages. You just get your W-2 earnings and whatever tax bracket you fit into, that's the taxes you pay. In the business world, you're able to deduct your expenses before you pay taxes. And we're going to go through very methodically this morning exactly what Google, I didn't want to come out here and my dad said this, or I said this, or any other moderator. Like, this is what Google says about your home-based business and AI. But then take what we're about to tell you and find a CPA, or if you're 100,000 or less, I know that a lot of people do it on TurboTax. There's different programs out there now that can help you do it. But you do need to be keenly aware of all your write-offs. Jerry Wyndham, I'm not sure if you're still here or not, but I'm just going to mention this in the beginning. If you want to be perfect, like if you have that analytical mind and you want everything to be exact, there is an app called Hurdler, Hurdlr, that will help you track everything you're about to say. And Jerry, I think you use that not just for this business, but for multiple businesses.
I do, Todd. It's really not hard to set up. I went in, I was able to set up. I've got 5 different companies that I track stuff through. So I have, my credit cards, my bank accounts, all that set up through there. So every day, or every few days, I just pull it up and then everything is right there at my fingertips and I categorize it. Just, I do my accounting thing. Makes it so easy and so fast.
Yep. So the great news for all of you here is that you are all business owners now. And for a lot of us, for sure, for my wife and I, for the first time in our life, we're actually creating an asset for our family. We're building an income stream that can actually keep coming when we decide not to work it anymore or not to work it as hard, whatever your decision is in the future. But in our type of business, we own the right to the customer that we've either brought to the company or our organization has brought to the company for the life of that customer paying. So it's just the greatest business in the world. And if you build a business here, you are going to make money and you're going to be 1099'd on it. So when you get that 1099, you want to have a really good documented list of expenses you've had. So we'll begin here. We're just going in order. And then anybody that wants to, moderator wise, please chime in. And then we'll get to the end and summarize it all. But we'll start with, again, this is the 26 small business tax deductions from Google. We'll start up with your startup expenses. If you're using product to consume, that was always a very gray area with my dad. I've had some CPAs say it's deductible, some not. My dad never used my own personal usage for any deductions, but other products that I would buy in bigger packs for samples at meetings, for displays, you name it, all of that was a tax deduction. So any other moderators want to chime in there or add anything?
Yeah, one school of thought on that, Todd, is too, you got to consider, that monthly, and it depends on how you want to do it. I'm like you. I set aside my auto ship as my personal usage stuff, and then everything else I either sell it or give it away, run it as a promotion or materials or whatever through the income statement. But one school of thought too is if you're not doing a lot of that is required to get paid. So as a business requirement, like you said in an earlier thing, that is your overhead for the month. So, if you don't have deductions, talk to your accountant. You may want to deduct that. You may not can get all of it, depending on what he says, but that is a school of thought as well.
Okay, then startup expenses and business supplies are going to combine together for this segment. And this is one of the greatest things because we are an online business. Most of you are doing business via social media, Zoom, online. So, and this is going to apply in some other areas too about house expenses, but let's just go through all the things needed for that. That would be computer, laptop, cell phone, iPad. I use them all depending on what environment I'm in. I'm presenting off an iPad. I'm zooming off my phone. I'm on a computer right now. So paper, printing, internet bill, all of that is all under business supplies for this business. So most now of the equipment you'll buy, the things I just mentioned, will now all be tax deductible as used in your business. Now, again, the gray area that you and your CPA have to walk through is my wife and I are full time, so we deduct it all 100%. There's never an exception. But if back when I was still coaching high school football, or if you're still very part time, and the computer you're buying is going to be used for 80% pleasure, 20% business, then it would probably apply that rule into the write-off. So again, anything anybody wants to add in there?
That's a good one.
Yeah, that can really add up, because that's a lot. I mean, I know that when you get computers, like we're all moving to this podcast world, so microphones, like all of that is all tax deductible. Software and electronics, that would be things like your Partner Co Share app, boards, if you've got the paid version of boards, like all of those different things we use that has an expense attached to it, all 100% tax deductible.
Including Zoom, Todd, we pay for our Zoom accounts. That also is in there.
Then home office deduction. This is really where we separate ourselves from some traditional business owners, because most of us do work this business out of our house. And the rules are fairly clear on this, and that is the percentage of your house that you dedicate to work your business from. That percentage of the house square footage wise, let's just say you have a 4,000 square foot house and you're going to have a room with 1,000 square foot that you're going to dedicate to your Zoom room, your work room, all for your business, which I highly recommend. Brenda said it from stage in Florida. The reason she gets on this IPA call every morning, dressed, makeup on, hair done, is because she goes to work every morning. It's really good to have a dedicated place where you've got a little privacy and you can go to work, but it's all deductible. So if it is 1,000 square foot of the 4,000 house, that's a 25% deduction across the board on every expense in that house. That would be everything from house note to insurance to you name it. If it's coming out of the house, it's a 25% deduction. So it's percentage of use of the house for your business. Anybody want to add in there?
And I will add what my accountant told me to do on that. I have a drawing of my office in case something were to come up and it'd be questioned. So you got your square footage out. So I'll just tell you to do a little simple drawing, and whatever the square footage is, everything Todd just said was totally deductible. And that's really not even people talk about gray areas. That's just black and white. That's what your office space is. No question about it.
Yeah. So Chris and I have been working together in this industry for about 20 years. I've been audited twice, Chris once that I'm aware of, but we've both, oh, you've been audited twice too. So we've both passed with flying colors. It's kind of, Chris and my wife Ashley make fun of me because Ashley is quote / the bookkeeper. We keep everything on credit cards, but she does have to consolidate all of that monthly and then get it to the CPA. But Chris dealt directly with the IRS, and then my wife did it all for us. So I always say we passed 2 audits, but it was really Ashley and Chris that passed the 2 audits. So everything we're saying, trust me, we deduct all this stuff at an extreme level, because it is like, I'm not giving 1 penny up that's in the law for me to be able to keep for ourselves.
And don't forget your phones, whether it's a home phone, your landline, or I don't know who still has those, but your cell phone, all that's right off. There's a certain amount of our electricity. Don't forget, ask your CPA about that, but there's a certain amount of that we write off also. And, before we get too much further, Todd, I want to go back to products. I want to talk about that for a second. A lot of times people ask me, well, how do you track the products? Every year at the beginning of the year, I print off a price sheet. It hangs on a clipboard in my cabinet where all of my supplements are. And every time I open a box or a bottle, I strike and make a note. And then when I get to 5, I do the cross. And at the end of the year, I total up all of those. Now you can track your personal use there. You can also, it's a great way to track your samples. Nobody knows how many we sample. So you've got to understand that. And there was a time in our previous business, we would sample over 100 people in a day. That's a lot of supplements. That's a lot of samples. Every sample is a write-off. And then you need to do what you feel is right in your heart. Do the honest thing about how much of your personal use is a write-off, because we are to be a product of the product.
Yes. So this page, a lot, most of the 5, 6, 7, 8, 9, they're all going to really fit under your home write-offs. But we're all going to go to 10, and that is car cost. So the simple part on the car is you can just write off mileage. If anybody's got that latest mileage, you can spit it out. It's 60 something cents a mile. Does anybody know that exactly this year?
Last year it was 70.5 cents.
How much, Jerry?
70.5 cents last year, unless they went
Oh,
down.
wow.
I think it's
Okay.
up to 71 because I just had to do some for work at the hospital.
Okay. So it's 70.5 or 71 cents per mile that you drive. So that Hurdler app that I mentioned in the beginning, I'll mention again at the end, that will do it for you. And Jerry's going to explain that in 1 second, but I'll just put this in your head. Like we all are striving to get better and better at this business. So like everybody in our world is a prospect. As a matter of fact, I'm meeting today a lady that waited on my wife and I 2 weeks ago at a restaurant that we wrote off after doing business with her at dinner that night. So just know that your food cost, car cost, all that kind of stuff is all writable off. We'll get to food in a second, but the car, I was able to write off 71 cents a mile there and back. That's the first thing. Once you start advancing in the company, start making some more money. If you do buy a car over 6,000 pounds, it's got to be over 6,000. So you can't do a truck, an SUV type car. And you do need to check. You can Google that. But a car over 6,000 pounds can be depreciated, most of them now, up to 100% the first year you buy it. So let's just use a recent Ashley Antley who is going to be 1099, a couple $100,000 from the company. If they went out and bought a $100,000 car that weighed over 6,000 pounds, they could depreciate the whole $100,000 off pre-tax. But if you do that, you cannot write off mileage anymore. If you depreciate on the front end, you don't get the mileage, but you still get the gas. You will be able to keep up with receipts of oil changes, gas, maintenance, all those kinds of things are still deductible, but you can't just do the catch-all mileage anymore if you deduct the whole car. Anybody want to add there?
Just that, Todd, I did that this time, and me and the accountant, we're going to weigh out if I've got enough expense to just write that off. If I don't, then I'm going to take the mileage option. But it's like you said, you only get one bite of the apple on any of this stuff that we're talking about. So if you're going to write it off here, you can't write it off there. Because you only get one bite. So you got to choose what that is. Now, for me, I went out and bought the 6,000 pound Tesla. So I don't have gas costs. I don't have stuff. So it's probably going to work out better to be on the mileage plan for me because I wrote my first one off in 2.5 years. So, and then I keep writing that car off every year, year over year over year. So if I keep it 10 years, I'll have written that car off 3 times. So keep that in mind as well.
And Jerry, you use the Hurdler app.
I do.
It actually asks you every time you stop if the mileage was for business, on what business. I know you've got multiple businesses on your app.
It does. It'll pop up. Okay, I made this trip from 140 County Road 442, which is my home address. I drove to Nashville 1204. X number of miles. That's $100 deduction. Was that business? Was that So then I choose business, and then it'll ask me which business. So then I choose. Well, this was Partner Co. this time. And I can give a demonstration of that. I've got it pulled up at some point.
Okay, so employees pay and contracted labor. Again, these are not necessarily for network marketing. I wanted to go straight by Google. That way we don't get off any weeds today. But so what I'm just going to mention there on employees pay, we generally are not going to have employees here until you get really big. But once you do, if you 1099 the employee, obviously that is comes off your top line. But secondly, there are ways to pay your children here in a home-based business. where they can make money without having to pay taxes and you still get the write-off. I don't have tremendous clarity on the dollar amounts you're allowed per child, but if anybody does want to add anything there, please do. But I will tell you, it's 100% deductible. We have paid all of our 4 kids for many years.
We
I would
pay,
just-
we pay our kids $450 every 2 weeks. So that's about $3,600 a month.
We have
And
4
that's-
kids. We have 4 kids, so it's
We have 4
yeah,
kids.
so
Yeah.
total of that,
So-
yeah.
And what
When
is,
I looked it up, it was around 14,000 because I needed it for my kids.
that's what I was
sounds
getting ready
about
to
right.
ask. What is, does anybody know the limit of what we can pay them?
For
That's what the-
2024, it says 14.6 on Google.
Okay.
That sounds
So
about right.
On Google, always check with your CPA, but on Google, you can pay each child up to $14,600 this year without anybody having to pay taxes on the money, meaning the kids won't have to pay taxes on the 14.6, nor will you. So that is a tremendous benefit. Just make sure you stay, in the white lines there, get good advice, double check everything.
So when we get paid, just so people can visualize this, when we get paid from Partner Co., we take that pay, we put it in and put it into each child's account to whatever your max is. Okay, so whatever it's going to add up for the year, our accountant told us 450 is fine for each child. So each child every 2 weeks because we get paid weekly, we pay a certain amount per week into their account. So, but we visually show that that money is going to them.
And then
And I-
we use the money.
Don't say that. You're not supposed to say that, John.
Well, and I would also throw out too, a lot of people have a housekeeper or whatever. So, we do when we travel, we hire a girl to come in and stay at our house. So we get to write all that off as well. But, if it's just a straight up housekeeper, again, going back to that percentage and that drawing that Chris talked about, I've done the same thing. So 21% of my house is set up as an office. So 21% of that expense goes to, just like you'd be cleaning an office downtown. Also, you got lawn care, you got all that stuff as well that is also 21% accountable. For me, whatever percentage you're running is you're accountable.
And every time you have a meeting at your house or a party or some kind of get together, you write that down. You talk about how, or maybe you have people staying at your house. Okay. Write all that down because your accountant can figure that out and how to get that as a write-off.
Yeah, Todd, just real quick for everybody as we kind of jump around here, just want to make sure everybody understands profits are better than wages. There's like 160 some tax write-offs that we get as home-based business owners, and your CPA, your accountant can help you with that. Some people there's some confusion with all the chats. Just realize that's a huge benefit that we don't talk a lot about, Todd. And that's one of the reasons we're doing this. Folks, the tax benefits of your home-based business are phenomenal.
Yeah, my dad used to always have this statement that every W-2 wage earner should join a network marketing company just for the tax advantages. Again, I'm going to repeat this. If you are an employee, you have 0 tax breaks outside of a child credit, marriage credit, whatever that is, but which the business owners get all that too. You only get tax advantages for owning your own business. So when you paid your $30 and joined Partner Co., you went from 0 tax breaks to 157 tax breaks that you can claim a loss for 2 years in your business. So meaning that if you had more deductions than you made in Partner Co., you can take the rest of those deductions and apply that toward your W-2 earnings and get even more of your hard-earned tax money back from your job. That's the reason my dad would always tell people that if you were an employee only, you should join our industry just for the tax advantages. 21 and 22 are really big here. Travel expenses. We all know in our world, we travel the world. We do business in 58 countries. So we really, all of us, when we're going to Tahiti, a trip we won, we're going to Italy to build a business. I'll be leaving out for Canada for a week. In about 2 weeks, up there for 7 days. All of the travel is deductible. So it is 100% of rental cars, airline tickets, Any expense you have there, it is 100% on lodging. Every hotel room is deductible 100%. It is 50% of meals. So if you are eating while you're working or you're presenting maybe to the waiter, that meal will be deductible at 50%. So if you spend $100 on dinner, $50 of that will come off of frontline revenue before you have to pay taxes on it. That is a huge, huge, huge one in our business. And you've got to get really good at working the business everywhere you go. Number one, it grows your business. And number two, it's a tax benefit instead of a vacation when you learn how to do this correctly.
Yeah, Todd, and I would throw out, because Christy said if you have a home party now, I run 2 food categories in my hurdler. So one is 100% deductible and one is 50% deductible. So if I'm traveling and it's food for me, and in that sense, that's 50%. But now if I bring people in and I provide a meal, and I come in for that, then I write that at 100%. That's 100% meal deduction, because I'm doing that at a party. That's part of the display. It's part of the process.
Which this
Also,
wasn't. Go ahead.
Todd, do you know very much about the Augusta rule?
Say that one more time, Christy.
The Augusta rule. Do you guys know about that?
I do not.
Okay, so if you have anybody staying at your house or you do a retreat at your house, you have the Augusta rule lets you do, and don't quote me on this, look it up. I think it's like 14 days. And so you could literally have meetings at your home and do all those things, and that counts as under the Augusta rule. I think my accountant told me I have like 14 days. And so also I have a whole suite downstairs that if people come and stay and we have meetings downstairs, I can write that off.
Yeah, and then going back to what Jerry just said, and the laws have changed on this a lot over the last decade. So I can't even tell you the exact rules, but what Jerry was saying, based upon bringing food in and feeding people and/or / entertainment. For example, I live in Destin. Of 8 of our top earners, maybe I reward, and we all go out on a deep sea fishing trip. That is entertainment. That is in most cases 100% deductible, but there have been some law changes there that I'm not always up to speed on. So, but entertainment is deductible. You just got to find out exactly what it is for 2025 and going into 2026. But all the things you do with your teams along those lines are deductible at some degree, and in some cases 100% deductible. And then obviously your charitable contributions, employees do get that one too. I mean, yeah, employees do get that one too. And then Brenda, we're going to go through some different ways to track all this. But Brenda, this is your spreadsheet. So why don't you walk us through what your tax attorney wants from you? Brenda, you're muted if you're talking.
I'm sorry. Yes, I was muted. When we sample heavy, we did booths for 7 years. And so this was something we used. We tracked all the samples and all the products. And many times we would just have to we would just divide half of our product use and consider that sample. So that's where we put product purchases. I track every product I purchase and every product I open. And so that was that column. And then office expenses, all freight, all postage, everything we ship out on Pirate Ship, y'all got to track that. Pirate Ship has a summary sheet. It's going to be beautiful. Travel, just like you talked about, all of our travel, if it is for the company, that's a total write-off. If I go somewhere and I speak the word partner co, or I speak the word about the drops, that is a write-off, whether it's a lunch, a meal, whatever it is. Seminars, all of our registration fees are a write-off. Office supplies, even water that I used to use to sample, that was a write-off. So I would pick off all the receipts. I keep track of all the receipts, all of the pens, pencils, your equipment, your paper for your printer, all of that is a write-off. And so you've got to keep up with that. And every month we sit down and record all of that. So at the end of the year, it's not laborious to hand our CPA the summary sheet, because I have all the records, all the receipts to back that up. And the CPA doesn't want all your they don't want all your receipts. If you can just hand them the summary sheet, that's all they need. But it's our responsibility to keep up with that, and don't let something go because you'll forget. So we write down all the mileage. There's a notebook in our car. We don't write off, we don't depreciate our car, but we do track the mileage. And so you got to keep up with that. Every mileage, you know, it states where we go, even if it's to go drop off a box of drops. So I hope that helps, Todd.
It does. And that leads us kind of to the end here. The CPA doesn't need all of your receipts. What he needs, your bookkeeper, as your business gets bigger and bigger, and your bookkeeper doesn't have to be a human being. It could be the Hurdler app. It could be TurboTax. It could be, I mean, there's all kind of programs out there that will help you on that. Hurdler seems to be the best for the home-based business that I've come across, or maybe a better one out there. If there is, you can throw it in the chat if you think it really works. But so your tax attorney or your tax CPA does not need all that. And you can do your own taxes too, like the TurboTax. If you're making less than $100,000 a year with PartnerCo, you know, you can self-do these. A lot of those good ones now, you have to pay $99 to get the good version, but it'll have all the deduction blanks in there for all of these kinds of things, and you'll be able to use that. And it'll even apply it back against your W-2 earnings if you created a loss with your expenses. But if you are audited, that's when you've got to have the documentation. So Chris, if you're still with us, can you walk us through like what the IRS agent wanted to see when he audited you? What did you have to produce?
Well, Todd, I didn't use Hurdler. I'm kind of old school, so I just use the mileage in I always keep a calendar. And I heard her talk, the most important thing you can do is document. If you've got documentation, I still remember what an auditor said to me once. He said, I think you're crazy if you're doing this, because I was traveling so much. And I'm like, well, I can prove it. So I did prove all the mileage, but like you talked about, the hotel rooms and your mileage, those things will be huge for you if you'll document them. And that's really the most important thing. But they just wanted paperwork that showed it. So on my calendar, if I was in Ohio, I'd put down what city I was in. And when I left that city for my next appointments, I just wrote down where I was at the next day. It wasn't hard to keep up with it. It's really not that bad. Now with these apps, it's really easy. But guys, I'll give you another one I'm using. I can't write off my yacht, but I can write off when I take people out on the trip that are business people that I'm using in my business, and I have to keep a record of it. They told me all I needed was a guest book. I wrote down who they are, when they were there, what we spent, and it'd be done on that day. Not try to recreate it 6 months later. Do it on a book. So we have a guest book. Anybody that comes on my boat, they sign the guest book. Now, if they're not business related, I can't write them off. But everybody in my family is in the business. So I'm going to reward everyone in my family on trips, because that's just, you know, it's legal. It's not like, you know, it's not, if it's a gray area, I'm not taking gray areas. I take what I know is black and white and kind of look at it like that. Hope that answered your question, Todd.
Chris, I love that.
One big one to add, Todd, as you invest back into your business, for example, many of you got Airbnbs for your team for the deaths and event. That's all a tax write-off. So you're putting some money back into your business to grow your team bigger, and it's still a tax write-off. That's a great way to use that, Todd.
Well, and other things you do for your team are like promos where you're giving back. If you run a contest and there's cash back, or t-shirts that you're buying for your team, or anything like that adds up too.
Banners, your pop-up banners, all your advertising stuff, all that's tax write-off.
Okay.
Yeah, and I get tickled, Todd, you know, because you hear a lot of times the tax write-offs for the billionaires. No, they're talking about 1099s. That's who they're talking about. When they say, you know, the rich man's tax code, that is anybody that's getting a 1099. So, you know, we want these tax write-offs. I mean, they're there for a reason, and the government has spent, you know, a lot of time pouring over, you know, the benefits of these. So it is there for a reason. Just take advantage of it. That's the best way to look at that.
Hey, Todd, can I add something in real quick?
Go ahead.
Just for some of you guys who may just be getting started, for so many it may seem like common sense, but I just want to make sure you understand that keeping your business money and your personal money separated is so critical. If you will open a separate account, make sure that you use, you know, if you're using a card, credit card, whatever, just make sure that those are separated. When you start mingling in your personal and your business, that's what makes it complicated. At the end of the year, at the end of the month, or whenever you're looking over those finances, if all your business expenses are in one account, it makes it very simple to be able to go through and categorize everything. I know that seems like it would be, just basic, but so many people don't know to do that when they're just getting started out.
That's a real good point, Sherry. For example, Todd, I have Bank of America and I have a business card. And at the end of the year, I mean, I can go back 15 years as long as I've had it, and it'll track all those categories for me.
Yeah, and Jerry Wyndham's holding up some credit cards. My dad knows that I'm horrible at keeping up with stuff. So when I first got started, he told me a Pacific American Express card to go get, and he said, I don't care if you buy a bottled water, it goes on this card. This is before people were using credit cards for everything. People look at me like I'm crazy buying, $3 and putting it on an American Express, but I needed it there for documentation and write-off. So Jerry, go ahead and share real quick what you're holding up.
Yeah. So like you said, what I've done is I've gone in and taken every business and it has its own credit card. And I make this point of sale. I make the accounting choice when I buy that bottle of water. Is this for this company? Is this for this company? Whatever. So I use that right there to do all of that. And then, like he said, the American Express will give you the summary. I know the Capital One and some of the other cards will. And it's literally so good that all you have to do is hand it to your accountant. Now, I do go through it with a fine-tooth comb, and I recommend everybody to do your own tax stuff. It's good to, even go through the free version on TurboTax or whatever, because nobody's going to do your deductions like you. Now, hopefully your accountant can find some better stuff, but, I make the point of choice at the point of sale. So, and I recommend that for everybody.
The other thing about,
go ahead, buddy.
Yeah, go ahead, James.
Oh, hey guys. So a couple of notes. This is amazing. By the way, who here is grateful we have leadership like this here, right? Like, wow, people don't talk about this. So a couple of notes that are interesting. Did you guys know the average person that doesn't have a side business like a network marketing business and they have a W-2 income is overpaying their taxes by $3,000 to $9,000 a year? So knowing that, I've recruited a lot of people. I've specifically recruited multimillionaires because they were just looking for a tax break and they didn't know that they could actually use this. So that's one thing. Another thing is, if you're anything like me and you hear this and I want to be diligent and I want to track, but I'm horrible with tracking. One thing I do recommend is look for a CPA. And if you are going to look for one, they're not all made the same. Some are super conservative. Some don't understand this business. So if you're looking for some type of CPA for help, I would ask them specifically, do you know how to do taxes for a network marketing business? So if you find someone like that, they know. So I've worked with my CPA for like probably 10 years and it's awesome. It's so worth it. And even for others too, one last story. My mother-in-law got started in this business and she didn't really work it, right? Who hears people that they have an account, but they're kind of not really working it. They're kind of there, right? She saved like $4,000 of her taxes the very first year just because she had her W-2 income, and this is will too. So if you know how to play it correctly and wisely and legitimately, it's super big power.
James, that's what our CPA told us years ago. She actually called us and said, this is what I need from you when we started in this industry. And that's where my categories came from. And so it is so easy to track that. And back to what Ken and Jerry said, we get a credit card statement at the end of the month. I use one card. I pick off all of my expenses. They go on that spreadsheet in a category. I have receipts with the names on them. If I went to lunch with somebody and there was a conversation about this business, it's all a write-off and it's so beautiful. But we have to do our part in it. Keep up. It's your money and nobody's going to protect it like you.
Yes, and that brings us to we'll end a little early here, but this is just for your mind to understand kind of where you are on the path to financial independence. And when you're in the people business, you hear every mindset. And the broke mindset is they pay no taxes and don't want to have to pay taxes. So the secret summary is if you pay no taxes, which is about 45% of our country, you're the brokest people in our country, because if you're making money, you're going to be paying taxes. The people who pay the most taxes generally are the wealthiest people in our country. As a matter of fact, Elon Musk is right now the wealthiest person in the world, but he also holds the title as paying more U.S. income tax than any other citizen ever has. It goes hand in hand. So, like, don't get stuck in the mindset that you want to remain in a 15% tax bracket. Get stuck in the mindset you want to be in the highest tax bracket that exists with the most deductions available. And then that's when you start wealth creating for your family. So if you don't think that way and you have desire for financial independence, then you've got to retrain your brain, because you can't stay broke-minded and create financial independence. The brain just will not allow it. You found the vehicle. That's the first requirement for financial independence. Now you've just got to go put the time into it and grow your mind. And as Susan Frank said, it is a personal develop program with a pay plan. So today was personal develop. If you're one of those people that is scared to death of your tax bracket, because there is nothing I hate worse now than April 15th, because I actually have to pay taxes. When I was a school teacher, I was always expecting some back, but I was so freaking broke, waiting on my $2,000 tax return check in March or April to show back up at my house, running to the mailbox every day. Is it here yet? Is it here yet? Is it here yet? And
Todd,
today, please don't come April 15th.
I do want to interject something. This is Christy. Also in this whole line of business where you're an entrepreneurial and this is what you have, you're also looking for medical insurance. And a lot of medical insurance is not a tax write-off. I did find something that is going to count as a tax write-off. It is a cooperative plan. It is going to work this year, because last year we were on Marketplace, and because of how much money we made, we've had to pay a ton of taxes on the Marketplace insurance. So if you're out there and you're looking for medical insurance and you're on the Marketplace, they are going to charge you. They're going to charge you in taxes. And so I did find a kind of a remedy for that. So I'm real excited about that. But just for those out there, that is going to be a tax. That's going to be a cost to you in taxes, is that medical insurance.
Yeah, and two more big ones that we did not hit on, because there's 157, but there's actually a true medical savings account that everything you put in that savings account is 100% deductible. So you can build a safety net and write it off on your taxes. And then you can do certain IRAs. I forgot the number we're up to now, but you can also put a whole lot back to retirement tax deferred. You can do the Roth and not pay taxes on it when you pull it out, but I think you're limited to about $8,000 a year in a Roth. But if you do some of the IRAs, it's upwards of 40, 50,000 you can put back tax deferred until you pull it out.
And just a quick tip, because there's lots of questions in the chat. Use ChatGPT and ask all these questions, and you basically have an accountant from your phone. Double check it with a tax professional, but all the little details, just ask Google, ask ChatGPT.
James, you're late. I've already moved over to Grok, Grok. It's smarter than ChatGPT.
I've heard. I did do this.
I was asking it everything under the sun yesterday driving to my meeting in Panama City. So the old man beat you to the punch. All right. Everybody out there have a super, super blessed day. Thank you, James, for plugging in and sharing this morning. Thank you to all the moderators that chimed in. I know people have questions, but we are not the experts. We just want to stay general, because we aren't all licensed. Like, it's not our job, but we just want you to understand the basics, and then you do your own research, find your own CPA or your own program you're going to do it on.